Alright, morning everyone, welcome back to Compound Interesting. This is Emil and this is Shit Shirt Sundays. As you can see, wearing a nice shit shirt today, so please rate it out of 10 with negative numbers getting extra points. But anyway, in today's video I'm very excited about this company that I've analysed and that I came across in the last couple of months. So the company is Xero, a cloud accounting software company. Now, why am I excited about Xero? Well, I might have mentioned it before, but I'm actually working as an accountant. I'm training in as an accountant, and I came across this software, I was told about this software, and we're just starting to use it in our company, in our accounting firm. But from what I've heard, it makes our lives and any sort of small to medium-sized business lives so much easier when it comes to accounting, just way more efficient, fast, and cheap. But before we really get cracking into the video, I just ask that you quickly smash the thumbs up button. It would mean the world to me. Thank you so much. It really helps get the small channel off the ground. And make sure to subscribe, because I bring out videos 2 or 3 times a week and try and bring you the most exciting, fresh, interesting stock picks that I've researched. So make sure to join the Shit Shirt community and let's get cracking straight into the video. Alright, so what exactly is Xero? So it's a cloud accounting software, which means all your accounting, all the information you need to build your accounts if you're a small to medium-sized business. So either, I don't know, let's say a coffee shop wants to do their accounts, they can use Xero, and Xero will automatically store all their data in the cloud. So this is better. It's better to have all your data in the cloud. It's easier to manage, it's cheaper, rather than having to build out your own data storage centers or your own data, having your data on premise. It's easier to have it all in the cloud because you can access it anywhere. It's safer, etc., etc. The cloud is the first selling point of Xero, and not only for, most people wouldn't know it, for the actual like small to medium-sized businesses using the accounting software to build their accounts, but I'm actually using it, or discovered it, through being in an accounting firm and being the actual accountants using Xero in the accounting firm side. So there's kind of 2 different sides to Xero. There's the side for actual small to medium-sized businesses, and then there's the side for actual accounting firms using Xero's platform. So for me, on the accountant side, in the accounting firm side, what I do is to build, if say they want to, say a small business wants to build their accounts, they use my firm, I'll get all their invoices and I'll get all their bank transactions, actual paper invoices and paper bank transactions, and I'll manually input those bank transactions and manually input those invoices into software. And this takes days, if not weeks, to do. It's really slow, it's really inefficient. So what accounting firms have been doing for 20 years is employing people, trainees, and not paying them a huge amount, but you're getting trained up to be an accountant and blah 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 blah. But they basically employ cheap labor to do this really easy work, but a monkey could do it. It takes a long time. A monkey could do it. It's not really like the moment I was told that this is what I have to do, I realized like this is completely ripe for disruption. How are people still inputting bank transactions, individual bank transactions, from a piece of paper onto your computer? It makes no sense to me. I was like, what the hell? How is a computer not doing this yet? And after working there for a few months, I discovered that there is now software that can do this automatically, and I was like, okay, that's such a good idea. I was even thinking that I would start a business that does this, that is, if Xero wasn't around, maybe I would have started that business. Well, I had the idea, but obviously I'm not going to do it because you need to be pretty advanced and all. But anyway, just goes to show that idea really resonated with me. So I went and checked if Xero was a public company, and boom, it was a public company. I was like, great, I'm going to research this and research into it further. So I'll share that research with you now. But yeah, pretty exciting research. I'm pretty happy with this stock pick. But that's a nice little thing just to be aware of. You should always be keeping an eye out for like investment ideas in your workplace or when you're going shopping or whatever, rather than just looking like, for example, Xero is probably a little bit less of an obvious stock pick as opposed to something like Netflix that everyone knows. Something like Xero, because not many people know about it now, you kind of have to you have to either kind of be a small to medium-sized business owner, or you have to be in an accounting firm to really have heard about it before. So just keep an eye out for those kind of stock picks yourself in your own job, because they can usually garner really, really good results over the long term, like stock appreciation wise. But anyway, yeah, so basically, instead of manually putting in the bank transactions, Xero directly connects to your bank account or to your client's bank account and manually inputs the transactions. So you're paying for whatever, like $30 a month to do this automatically, rather than having paying a human a 1 week's wages to do this manually. Obviously that makes so much more sense to just get software to do it instead of a human. And any sort of accounting firm or a small to medium sized business that isn't using something like this in the future is going to be left behind. They'll all have to adapt or die to this kind of innovation. Just, it's so much more efficient, and even like a human's going to make so many mistakes, whereas software is going to make less mistakes. So it just makes perfect sense to me to use a company like Xero. Now, Xero isn't the only company doing this. There's also QuickBooks, but I'll talk about that in a minute. Another clever thing that Xero have done for accounting firms is to offer accounting firms to recommend Xero to their clients. So if I'm an accounting firm, I can say to my clients, I think you should use Xero Cashbook, which is $7 a month, or Xero Ledger for $3 a month. To your clients, because that's going to make my life a lot easier if you're using Xero, because you'll have all your bank transactions and everything, and your invoices, everything nice and organized, and your books done quite well and easily and stored in the cloud. And then I can just easily log into your Xero account, pull out all that information and build your accounts for you then. So it's an incentive for me, the accounting firm, to recommend Xero to the clients. And the clients are like, okay, it's $3 or $7 a month. It's super cheap, and it's going to probably reduce my accounting fee. So that's really a win-win-win situation for the firm, the accounting firm, the small to medium sized business, and of course Xero. So that's always great. Win-win situations are always fantastic in business. Now Xero is trying to expand their ARPU, so their average revenue per user, by doing things like expanding into offering other services rather than just accounting services. So now they're offering services like payroll, inventory management, invoicing, like sending out invoices, small medium-sized businesses, building your invoices and sending it out to your customers. And they're even offering now loans to small to medium-sized businesses and allowing the small to medium-sized businesses access to capital. So it's kind of almost like what Square is trying to do as well. But I don't think although they're kind of competing with Square, they're also actually kind of partnered with Square. In Australia, they're integrated well with Square. So like on a Square platform, on one of those Square machines, you can get Xero and easily and quickly get all the information from Square, like all the sales you made, and put it into Xero. So they're integrated with Square, and there's a bit of a partnership there, which I think could eventually expand to the United States and the rest of the world. And maybe I should have mentioned, probably should have mentioned this at the very start, but Xero is based in New Zealand, so it's actually a startup from New Zealand. So this is also offering you a bit of exposure to a company that's not based in the United States. So yeah, it has like 50% market share in Australia and New Zealand, and only 20% of people worldwide use cloud accounting software worldwide. So there's a huge market for growth internationally. So it's based in Australia and New Zealand. That's where they're doing really, really well. And just now they're starting to expand into the United Kingdom, so they're doing well. I'm from Ireland, so that's why I'm seeing this kind of starting to take off now in my accounting firm. So I'm guessing it's similar for other small to medium-sized accounting firms, and also probably as well in North America, where the big bucks are. So Xero is an example of a SaaS business model, so software as a service business model. And software as a service businesses have really done extraordinarily well in the last 10 years. So what is SaaS? So it's basically when you sell software to a company on a subscription basis, and that software is implemented through the cloud. So an example is Salesforce. So I'm just going to pull up a chart of Salesforce over the last 10 years. But as you can see, since IPO, Salesforce has completely rocketed up, and it's now one of the biggest companies in the world, and it's just recently been added to the Dow Jones Industrial 30. So you can see that little spike at the very end, that 20% jump was just because it was announced that it'll be added to the Dow Jones 30. So one of the biggest companies in America and most influential companies in America. So they kind of one of the pioneers of the software as a service business model. So why is software as a service doing so well? It's because the companies offering the software as a service, as well as the companies using SaaS services, both benefit. They both prefer the recurring revenue model because it's operating expenses as opposed to capital expenses. So like back in the day, people would just sell you software for $1,000 to your business. You buy it and you have it for life or for 5 years, as opposed to paying $30 a month, which is usually better for small to medium sized businesses to just have a set amount they know they're going to have to pay every month. And if something goes wrong, they know they can, if they don't need that service anymore, they can just cut it out, but they still have all their information in the cloud, which is handier. I've already talked about that. But also for the software as a service companies, they know how much revenue they'll likely to be getting over the next year or the next 5 years. They can see how long a customer stays with their company and uses their services. So as long as that company that is using their services, so as long as say your coffee shop is using Xero services, you're going to be paying €30 a month or €60 a month until your coffee shop goes out of business, or until you retire or whatever, or until you sell the coffee shop. So that could be a long time as opposed to just a one-off payment. And software as a service generally has really, really good margins, and because of that, software as a service is completely dominated, has like a 20% annual average return. Like the average of all the software as a service companies in America, their average CAGR is like over 20%, which is enormous. Anyway, let's get back to Xero rather than SaaS, but also quite an interesting. I'll leave a little link in the description that ARK Invest did about that, about software as a service companies and where to invest in them and all that kind of thing. So check that out. So I want to talk about a couple of acquisitions that Xero have made. So they're kind of trying to make some strategic acquisitions. Now I'm always kind of a little bit hesitant of acquisitions because sometimes companies, particularly more established companies, tend to go a bit ham with acquisitions and just buy up any small company that's making any sort of money that they think is somewhat related to their business, but that ends up being a negative buy. Like they end up not getting their money back and they overpay for these small companies. So you don't generally want too many acquisitions, but strategic, smart acquisitions can really add to a business. And Xero have made some good acquisitions. For example, Waddle. So this Waddle is a cloud-based lending for SMBs. So that was what Waddle did. Now Xero have acquired it as they obviously want to implement the service into the Xero platform, all in one ecosystem for SMB. So a very clever acquisition there. And another smart acquisition from Xero was they bought HubDoc. Now I can't remember the amount they bought them for, but anyway, HubDoc essentially allows you to upload documents to the cloud. So this acquisition also obviously makes a bit of sense, as HubDoc allows like the SMB to upload their invoices or whatever other documents into the cloud for later use or to put them into your accounts. So I just wanted to bring up a slide for you here. As you can see, the main bulk of how Xero makes money is in the accounting software at the moment, but the real growth is coming from those other platforms that Xero said they're looking to get into. So remember, like the offering loans and the invoicing and stuff. So that's the platform revenues. So you can see that's up 82% year over year. So that's enormous. And the average revenue growth over the year was 30%. So really, really strong growth. But yeah, that's really, really cool. The platform, 82% growth year over year. So if that could keep growing at like 50% a year, that could become a really substantial part of their business. So it's good to see that the investments that they're making into those platforms is really paying off. So yeah, maybe we should start to have a little look at the numbers for Xero. Maybe we'll have a look at their international exposure. So as I mentioned before, they get the most of their money from Australia and New Zealand. So you can see they have like 1.4 million subscribers in Australia and New Zealand. And the revenue is about 500 mil. And 50% of SMBs in Australia and New Zealand are adopted to the cloud. So they're using cloud accounting softwares. Whereas the rest of the world is less than 20%. So the real growth, you can see United Kingdom, subscriber growth 32%, very, very good subscriber growth there, with 50% growth in revenue in the United Kingdom. And the rest of the world growth is insanely fast as well. So that's coming from the likes of South Africa and just random English-speaking countries. North America, I'd like to see this growth a little bit faster in future, but I suppose maybe it's not their focus right now. But you can see the numbers of subscribers in the United Kingdom and North America and rest of the world is tiny. Like with Australia, almost 1 million subscribers, and in the entire of North America, less than 250,000. So you can see how much room they have to grow into these markets that are using so little, aren't using cloud accounting software yet. But it's so much better, as I mentioned, all the advantages to Xero over traditional accounting softwares. Like the traditional accounting softwares, I'll put up a photo for you now, but they're so clunky and just like look like they're from the 1970s. They're so not intuitive to use, especially for a young person like me. I'm looking at them and I'm like, what on earth is this? This is awful. Like the accounting softwares that I have to use in work. No offense to anyone watching from our work, but yeah, get onto the more up-to-date, proper accounting softwares like Xero or QuickBooks or whatever, where it's just much more intuitive and modern and sleeker and with better user interfaces. All right, so let's have a look at the rest of their numbers. So their subscribers, now 2.2 million, over 2.2 million subscribers. So 467 plus 467 year over year, which is 20%, which they don't tell you, but 20% is what the number is. So yeah, maybe I'd like to see a little bit better than 20%, which is still a really, really fast growth. But as we'll see in a minute, Xero comes with a very, very high price multiple. So you'd really want to see some really strong growth. ARPU only up 2% year over year. So ARPU is average revenue per user. So that means like if I spent $30 a month with QuickBooks, or sorry, with Xero last year, I want to see like me personally spending $35 with Xero next year. So you want to see the revenue per user increasing every year, as well as the number of users increasing every year. Ideally, that's what you'd want to see. But because Xero do have still enormous room to grow into the rest of the world, even if they don't increase the average revenue per user, they're still going to have plenty of revenue growth just from adding subscribers. But ideally, you'd want both. But anyway, AM or, so that's average monthly recurring revenue, which is basically the same as revenue except divided by 12. The growth in this is obviously the average revenue per user growth plus the number of subscriber growth. So that's up 29% year over year. Lifetime value, that's an interesting metric. So that's how much money they can extract from each customer over the course of the customer's lifetime using Xero service. So they added 1.2 billion in lifetime value to their 5.5 billion total lifetime value of all their collective customers. So that's how much gross margin they can eke out from all their current customers now. And then operating revenue, we're not going to go into them too much. Now you can see the growth in their earnings. So it is exponential growth, even though it kind of looks linear growth there. But yeah, growing at a nice steady clip, but not absolutely extreme growth. But yeah, still definitely very nice growth. And this is their forecasted revenue growth. The revenue is in blue, so you can see past this on the left and the forecasts from the analysts on the right. So the revenue is expected to just continue kind of linearly and a little bit more in the next few years. So nice, strong, healthy growth. And they're just starting to be profitable now, which is nice to see. I don't care too much about profits myself. I'm more of a high growth investor, so any sort of profits I think should be reinvested into the business. And after listening to the earnings call, this is what they said: the majority of their earnings will be reinvested into the business, because someone asked if they're going to be buying back shares. But no, high growth companies don't buy back shares. They reinvest that money, because it's much better to reinvest the money back into the business to make the business much bigger, employing, servicing more customers and making their products better. Much better use of their capital and their incoming money at the moment is to redeploy it into the business. But yeah, 40% of Xero's expenditure is on sales and marketing, which I don't know, some people think that's a bad thing, but I guess they're making their CAC months, so customer acquisition cost months. So how long does it take for them to make back the money that is spent to acquire a customer from that customer? And it only takes a few months. So anything after that is just pure profit. So if you're spending 40% your earnings or your revenue onto sales and marketing, but you're getting back like so much more in value, what's the problem with sales and marketing? If you're getting such a good bang for your buck by using sales and marketing to expand your business and getting more users using cloud accounting software, which is Xero's mission. All right, a couple of potential negatives about Xero, and then I'll wrap up with my conclusion. So Xero is kind of aimed at small to medium-sized businesses, and as we've seen over the last 10 years, and particularly with COVID-19, small to medium-sized businesses aren't doing as well as really large companies. Really large companies are kind of eating into the market share of small companies and small to medium-sized businesses. Even like restaurants, like this was started with like McDonald's taking over and Starbucks taking over small cafes and small restaurants. But now it's like Google's taken over, Facebook's taken over, Amazon's taken over, all sorts of small to medium-sized software tech companies. They kind of dominate everything now. But software as a service companies have been doing well, so maybe this isn't too much of a worry. Another factor is that Xero does have competition in QuickBooks, and I've researched a bit into which platform is better, and there was no conclusive answer. Both of them are equally useful and handy. Some people prefer QuickBooks, some people prefer Xero. Xero has better ratings but less users, so I don't think there's going to be one clear-cut winner, and I think there's plenty of room for both to thrive in the future. So and we don't have the option to invest in QuickBooks as it's a private company, so unfortunately we can't really dig too much into their business as much. So Xero is the only really option at the moment, but this industry, yeah, great industry, and I think both will do well, so I'm not too worried about the competition because there's enormous room to grow, and neither are really taking the lead or offering much better services or much better pricing than the other. So at the moment there's definitely room for both. Another couple of metrics, and then I'll give you my conclusion. So the price to sales ratio is an all-time high, so it's the most expensive Xero has ever been on a price multiple. So the price to sales ratio is 22 and the average is 13. And here is a snapshot of the ownership of the company. So as you can see, insiders own like 20% of the company, which is always great to see, even though it means that they're likely to sell their shares eventually. I like to see a high amount of insider ownership. Also, their churn has decreased, so the amount of people leaving the platform as opposed to the amount of people joining their platform, that percentage, whether it's like 2% leave compared to the amount of people who join, has decreased year over year, so that's also a great sign. So I also really like Xero's mission, so here it is. To be the most insightful and trusted small business platform, and their purpose: make life better for people in small business, their advisors and communities around the world. So good, they know what they want, they know what their purpose and their mission is. So I always like to see a strong mission, and their strategic priorities here: drive cloud accounting, grow small business platform. So they really want to bring cloud accounting to the world because it's better, and they really want to spread out into the entire world and have the best software, the best product for small to medium-sized businesses and accounting firms. So in conclusion, I think it's quite obvious that I'm actually quite a big fan of this company. So yeah, I'm definitely going to be making an initial position into this company next week. I'm going to probably buy a couple of shares, probably buy just one share to start off. So the market cap on this company is $14 billion, and that's in Australian dollars. So that's about $10 billion US, probably like $9 billion, $8 billion in US. So decent sized company. Price to sales ratio, as I said, was 20, so very high price to sales ratio. And you can see the growth in the stock price since it IPO'd in 2012, went from $5 up to $100. So yeah, I definitely think this is a great company that will do very well for a number of years, but maybe not the absolute best entry, but I'm still going to be making an initial position. This is what I'm going to do, and will definitely add to my position if it drops, and I'll just be dollar cost averaging in case if it doesn't drop, I'll still be buying, but if it does drop, I'll probably add a good few shares, and I actually want to make this a medium-sized position in my portfolio, and I'm probably going to sell some of my smaller positions that never really excited me much in the end after researching them further, because as I mentioned before, that's what I kind of like to do. I like to open an initial position into a company, kind of track it for a while, and if more information comes out, or if the stock price drops, or something entices me to be more interested in the company, I'll be buying more shares. But with Xero, yeah, I'm going to be making this a medium-sized position, and I'm going to be tracking this one closely and adding to this position over time is what I'm thinking right now. But I'll keep you updated on this one, because yeah, it's definitely an expensive stock at the moment in the price to sales ratio, and the price to earnings ratio is something astronomical as usual with my kind of stocks. Price to earnings ratio of 555. So yeah, pretty high price to earnings ratio to say the least. But oh yeah, and their balance sheet, yeah, good balance sheet, 1-to-1 in assets to liabilities, and good cash position, so they can cover their long-term debt from their cash. Not an absolute 10 out of 10 balance sheet, but yeah, perfectly safe. So nothing wrong with their balance sheet. Anyway, that's all I have to say about this video. If you enjoyed my analysis, I'd really appreciate a like. That would mean the world to me. I definitely have to research into this company a bit further and track it a bit more closely. But yeah, very, very interested on my initial research into this company. So excited to have this one in my portfolio as of next week. I'll probably be dumping some of my less enticing stocks. But anyway, I really hope you enjoyed. Make sure to subscribe if you haven't already. Let me know if there's any videos you want me to bring out. If there's any videos you want me to bring out. Thank you so much for watching. Really appreciate it. It means the world. Thanks again, and I can't wait to see you in the next video. Cheers.